6 things to avoid when applying for a home loan. Hi, my name is Anthony Cuff, local realtor here in the Denver Metro, and today I want to talk about 6 critical mistakes to make sure you don't make when you're applying for or going through the process of securing that loan for your next home or investment. Number 1 is don't deposit any huge sums of cash. Lenders need to be able to source your money, and cash isn't as easily traceable as they'd like it to be. Before you deposit any significant amount of cash into your accounts, make sure to discuss the proper way to document all those transactions with your loan officer. Now, number 2, don't make any large or major purchases. It's not just home-related purchases that could disqualify you from that home loan. Any large purchases can be red flags for lenders. People with new debt have a higher debt-to-income ratio than when they were approved. Debt-to-income, that's how much debt you have compared to what your monthly income is. And since higher ratios mean riskier loans, borrowers might not be able to qualify for that mortgage if something major changes. So resist the temptation to make any major purchases, even just for furniture or appliances, not just for that next supercar, until after you've closed on that house. Now, number 3, make sure not to co-sign any loans for anyone. Now, I understand you want to support friends and family, but here's the thing. When you co-sign for a loan, you're making yourself accountable for that loan's successful repayment. And with that obligation comes that same higher debt-to-income ratio we were just talking about. Even if you promise you won't be the one making the payments, your lender's going to have to count those payments against you. Number 4, and this is a big one. Do not switch bank accounts. Lenders, like we talked about earlier, need to be able to source and track not only the income, but your assets. And that task is way easier when there's consistency among your accounts. So before you do any major money transfers, or even minor money transfers, make sure to speak with your loan officer. Now, number 5, do not apply for any new credit. And this is just like co-signing for someone else. It doesn't matter whether it's a new credit card, a new car, a new this, that, or the other. When you have your credit report run by organizations in multiple financial channels, you've got mortgage, you've got credit card, auto, what have you, it's going to have an impact on your FICO credit score. Now, lower credit scores can determine your mortgage interest rates, possibly even your eligibility for approval. And obviously, you want the best rate so that you're getting the best payment you can get. Now, number 6, don't close any of your bank accounts until after you've closed on your home. Many buyers believe that having less available credit makes them less risky and more likely to be approved. This isn't exactly true. A major component of your score is the length of time that you've had credit and the depth of your credit history as opposed to just your payment history. Now, your total usage of credit as well as a percentage of available credit. Closing accounts has a negative impact on all of those aspects of your score. In short, whatever financial decisions you're considering, consult with a financial expert. To sum it up, just be upfront about any changes when talking with your lender. Blips in income, assets, or credit aren't necessarily a problem, but they should be reviewed and executed in a way that ensures that your home loan can and will still be approved. Now, if your job or employment status has changed recently, that's okay, but make sure to share that with your lender as well. Ultimately, it's best to fully disclose and discuss your intentions with your loan officer before you do anything financial in nature, just to make sure that it's documented and that you can close on that next home.